This is the Path to Homeownership IG series where we talk about the path to owning. And we're joined here today by Brian Samardi.
Hello.
Hello, hello. How are you?
I'm good. How are you doing?
I'm doing really well. Thank you so much for joining. I appreciate you saying yes and taking the time.
Thank you for having me.
Yeah, absolutely. So today, like I was mentioning just before you joined us, that this is all about getting the facts, busting out some of the myths that people have about homeownership, about the process, about lending, about getting financing. And so we want to bust down all of those things. But before we do, why don't you tell the people who you are, what you do, and why you do it?
Oh, for sure. Hi, everyone. My name is Brian Simardi. I'm a loan officer for Cross Country Mortgage. I'm a prior service Marine, and I help veterans and pretty much everyone who wants to relocate to the DMV finance their first home or next home.
Awesome. I love that. So we're going to jump right in because there's lots of questions, and I know there's things that people want to know, especially when it comes to financing and getting the money to actually fund some of these dreams that they may have. So, first one I want to get into is what's the number one reason a loan application gets denied?
Not disclosing everything. It's pretty often that people meet me, and it's usually through referrals. You trust your realtor, you trust someone who invites them to my life, and it's very I don't know, it's just very vulnerable to just basically get naked financially in front of me. So I understand when someone doesn't want to tell me everything, but that is the number one reason to me where things don't get approved, because
Mm,
you can tell me what you do, but if you tell me there's a gap, I may be able to find a way to give you advice on how we can mitigate that obstacle. Or if you send me your bank statements late and I see like a reoccurring charge to your cousin, your uncle, whoever, we have to annotate that. And then now we have to get
mm.
more documents in order for us to qualify for that loan.
Oh, wow. So not giving all the information up front can really hinder you when you're trying to get approved.
100%.
Awesome. So, what credit score do you think people actually need versus what they think they need?
This one was a tough question. It varies. I have to say
Okay.
it has to vary. Um, in the DMV, most down payment assistance programs require at least a 640 credit score. Going as low as a FHA loan, you can go as low as like a 580, 600.
And for
I
those who don't know, FHA means,
Federal Housing Authority.
okay.
So anything FHA, VA, USDA are considered government loans.
Okay.
So that it's government subsidized. Regular conventional loan from Fannie and Freddie is your typical loan. And then I mentioned credit varies because there are now non-QM loans, non-qualified mortgages.
Okay.
I'm dealing with two right now where they are business owners. They're making very good money, over like $30,000 a month, but on their tax returns they don't show that.
Oh, okay.
So that's my loophole for them. In order for them to get a 10% down loan for the bank statement loan, that they need to be at least a 700 credit score.
Mm,
And the way
okay.
I break down my things when I talk to first time home buyers, credit gets you loan options, your income gives you buying power, and then your actual cash completes the transaction.
I like that. So I think a lot of people think that it's one or the other, or that, it's if I don't have a good credit score, then I'm doomed. I can't do anything. But you're saying that that's not the case.
It's not. There's other options, there's other routes. There's a lot of loans that cater to every individual, to their own special needs. I
Right.
don't
Yeah.
know how else I can say that.
Okay, and then what would you say, what you've seen in your experience that instantly raises red flags for an underwriter when you're going through the loan process?
That number one thing that denies loans is anything that's reoccurring on your bank statements that's not shown on your credit report.
Hmm.
So
So,
something like Klarna, anything
mm,
that's pay as you go that doesn't necessarily give you a statement. but is basically another loan.
Wow.
Those type of things are sneaking under the radar and delaying a lot of settlements.
Really? So this is interesting because I just was talking with the financial planner yesterday, Sylvia, and I asked her this question about, I've seen like the Klarna, the pay laters, all of those, if those actually can potentially affect your ability to show that you can pay for a home loan. And she was like, I'm not quite sure, but it doesn't actually help in terms of your debt to income ratio. So are they looking at those pay now or buy now, pay laters as actual debt that you're accruing?
It's a liability.
Okay.
If for majority of loans, we need at least two bank statements showing you have the cash to close, unless we can do a 120% rule. For conventional loans, if your cash to close, just put out a round number, say $100,000 or
Hmm.
say $10,000. If you can show you have at least $12,000 in your bank account, we don't have to review your bank statements.
Really?
Yeah,
Okay. So these are ways that are going to help people who would you say like these types of things would help what kind of buyer?
it's the hardest thing to say. It's anybody with a lot of assets.
Okay. Okay.
A lot of these things, if you have bad credit, if you put a bigger down payment, lenders can make exceptions.
Okay, so if you have the cash, but maybe your credit is not that great, there still can be options for you to potentially get a home loan, even with the lower credit score.
Yes.
Okay. And so these are some questions we want to get into now. They're going to really help kind of educate people because I think a lot of times, especially when it comes to the home buying process, people just don't know what they don't know. They don't know what to ask. And so these questions I think may be helpful to those who've been considering home buying, but maybe just didn't know like, where do I even start? Right. And I think a lot of people think that you start with a real estate agent, but that's not really the case. It's not the case at all. So what documents should a buyer start gathering before they actually apply with a lender?
Any and all financial statements.
Okay, so that would be bank statements, your W-2s. What other types of statements would you
It,
suggest? Obviously.
it, if you are a W 2 employee, it's going to probably be the easiest route. 2 years of
Okay.
W 2s, 30 days worth of pay stubs, and your bank statements.
And that's
Very
not,
smooth.
yeah, that's not bad. That's not, I think a lot of people think they have to have all these different things, their taxes, all of that. Is that typical or is it just really case by case?
Case by case. So if you get any down payment assistance programs, so DC, Maryland, Virginia, they want to make sure you're not making too much money. So
Okay.
therefore, they will look at your tax returns.
Okay.
So
Okay.
depending on the program and how much assistance you need, then they're gonna like
They
strip you
want to see
down
what
and
you're making in.
exactly.
What are you bringing in exactly? Okay. And how much house can someone realistically afford, um, and not what they think the bank will approve them for?
This one is a loaded question to me, but everyone's different and
Okay.
everyone has different spending habits.
Hmm.
To me, it's if you're currently renting, what are you currently renting? And do you want to keep that payment?
Mm,
Because it's all about your loan amount.
okay.
The most simplest way I can break it down, 30 years is your average fixed rate mortgage.
Hmm.
Divide 30 years into months, that's 36 months. Divide any loan amount by 360 and then apply a little bit more for interest.
And that's going to kind of bring you to what you could expect monthly that you're paying.
Yeah, ballpark.
Okay. Okay. And that'll kind of help people give them an understanding of like what would actually be in their range with before kind of jumping into applying for anything.
E- yes, but I would also mention understand what's involved in a mortgage payment.
Okay.
You have to factor in property taxes, insurance, maybe mortgage insurance. Those type of things all add up.
So when you're looking at people who are considering renting versus buying, what would you say are some of the most like concerns that people have when they're trying to decide like should I still just keep renting or does it actually benefit me to look at what it would cost for me to actually just own my own property?
I believe, how comfortable are you with your finances?
Okay.
That's the biggest thing. Like, being a homeowner, being an investor, I invest in real estate in Baltimore. I live in Rockville. You never know, you have this snowstorm. We just had the ice. We got to buy tons of salt. You got to get your shovels. Maybe you need to buy a snowblower. All these little things add up. That's
Yeah.
not on your daily, your monthly budget, whether you're cutting the grass in the summer or whatnot.
Hmm.
And the county will tax you or will fine you if you don't keep up with your lawn or don't shovel your snow or the ice of your own sidewalk.
Okay.
So
Wow.
all these little things, property taxes don't go away. As a veteran, I can only say that if you're 100% has a 100% disability rating, you are exempt from property taxes.
Wow. Okay.
I just had a settlement earlier today. My client qualified for tax abatement. Therefore, she does not have to pay taxes for her property in DC for the first 5 years.
Now, how does someone get a situation like that? That sounds like a dream.
So I was at a seminar about a week or two ago, and this lady made a joke. Tiffany, or Vivian too. Sorry. Um, she said most people are more willing to get naked physically than financially.
Because it is such
And
a thing that is close to heart. You know, some people feel like, do I really want everyone knowing, how much I'm making or what I'm making? But I think it's important that people understand that as your lender, this is why it's so important to have a lender that you trust and someone that you're comfortable with. Because, like you said, not divulging all the information could actually hurt them when you could have a solution and they're thinking, like, oh, there's no way I should tell them about this. But that actually could be the very thing that helps build some more trust with them because you're able to find a solution for them. So if you all are listening out there, don't lie to your lender. Give all the information that you possibly can to make sure that they can actually help you and set you up to have the best opportunity to be approved. So that's really important. Um,
100%.
what would you say is what's the biggest difference between being pre-qualified and pre-approved, and why does that matter?
So with a pre-qualified letter, generally, I think, to be honest, most lenders can give you both at whim, but it's
Okay.
really having a lender who can do their due diligence to review your bank statements to make sure there's no hiccups during processing and to
Mm,
do the fine combing of your credit report to make sure, oh, I missed that one dispute. And that's that one issue when it comes to your credit that could deny the loan.
really? What can you give an example of what that could look like?
Mm, say something simple like a student loans. Student
Okay.
loans, a lot of people have them. Depending on the loan program, we can use at least 0.5% or a full percent. But you have to put yourself in the right loan program to qualify for the 0.5%.
Okay.
And say 1% of 50,000 could be $500 versus 0.5%, 250. That could make and break you maybe another 25,000 in buying power.
Oh, wow. Okay. So this is good info. I hope you guys are taking notes. um, so I want to get into some myth busting questions. These are things that I feel like people probably have been told all their life, told by someone that maybe bought a house like 10 years ago, 20 years ago, and they're like, oh, but they don't realize things have changed, times have changed, and you know, it may not always be what someone else has experienced. So I kind of want to help some people out. So this really hits home for me because as a self-employed person, I think a lot of times you feel like, well, if I don't have the traditional way of bringing in income, I may not even qualify or be in the running for owning property. But that's not always the case. So can self-employed buyers and 1099 workers still get approved? And is it more difficult for them?
First question, yes, self-employed borrowers, 1099 workers can definitely get approved. It is a little bit more difficult, I would have to say, because I mean, to be honest, as a entrepreneur, business owner, you're more into the sales of feeding the business versus being organized with your financials.
Mm.
Also, it's very important to keep a good bookkeeper. That's probably the biggest thing. But as long as you are organized, that is my biggest tip financially. We can make something work. Whether if you have an accountant, we have a P&L loan, profit and loss. So if we can get a signed profit and loss statement from your accountant or tax professional or your bookkeeper, then we can use 90% of that.
Oh, wow. So if, and this is important because I know a lot of people that I know, especially for me as a professional singer before I got into real estate, um, always seeing people that, you really don't, everyone doesn't always have their business together, right? They don't
Yeah.
always have the receipts, they don't always have everything. So are there different tools that maybe people can use that you've seen that can help them kind of get prepared to start maybe doing the things that they need to do to document their activities so that they have a better chance of showing what it is that they make and how they make it?
Being organized first. The easiest step or the easiest program that I can help 1099 self-employed business owners is a bank statement loan. You
Okay.
should, as a business owner, you should have a separate bank account for your LLC, sole proprietor, whatnot. 12 to 24 months of bank statements is what I need. And then we
Okay.
average out the deposits into your account over those 12 months.
And that's how you kind of come up to what
You're
they're making and what they
qualified
could potentially. Okay.
for buying
Gotcha.
power. Yes.
Your buying power. Awesome.
Mhm.
So it's not impossible. Those of you who work for yourselves do know that it's possible for you to also be a homeowner if you want to. It may take a little bit of extra work, but if it's something that you really want, it can actually happen for you. Um, so I know this is a thing people talk about when you're going through the escrow process. Can you give some tips and why is it important to not make any purchases while you're in escrow and going through the closing process once you've actually made an offer on a home, that home has been accepted, and now you're going through the process of actually making sure that the loan gets funded?
For sure. For sure. The biggest example I can have is like big purchase. So big purchases, if you finance anything, that will make issues. Whether it's a credit card, applying for a new credit card, we have to document it. So we may need a statement. We need some type of statement saying that this is your new credit card. You have new loan availability to you, and you haven't abused it initially. Whether you get a brand new credit card that has a $10,000 max, but you put $9,000 immediately on it, that can
Mm,
affect your credit score. And then, like I
okay.
mentioned previously, your credit scores gives you loan options. But if you drop your credit score, then you might lose a couple options, and you may lose the
Mm,
option that we're working with.
okay.
Um, when it comes to purchases or liabilities, my example is a $700 car payment will knock you about $100,000 off your buying power.
Wow. That's very similar to what the financial planner Sylvia was telling us yesterday, that a lot of times what happens is people think that, oh, well, I need a car. I can go and just get a car, and not realizing they really could be jeopardizing their entire transaction.
Mm-hmm. 100%.
Wow. Wow. And so, what would you say is one thing that people can do in 30 days or starting today that can kind of help them prepare for meeting with a lender, and potentially getting approved for financing?
Get organized. Get organized is my theme as a lender. Tax returns are due in April
Hmm.
for if you do it on time, if you don't get an extension. This is the time where you should be gathering your W-2s, your pay stubs, uh, and maybe sitting down with a financial planner, a financial advisor, or even a lender like myself. I can help you break down how much you actually make. 'Cause I'm surprised how many people don't know how much they make
Really?
annually, monthly. They just get a paycheck and then they use it.
Spend. Yeah.
Yeah. on a monthly
No
basis.
planning, no organizing. So, what are some of the things how you help your clients? Say someone watching now decides that they want to reach out to you and maybe they're not so organized. What are some of the things that you do to help get your clients organized and ready so that they can be approved?
So every time I have a client referral, I recommend getting either in person, coming to my office in Rockville, or we'll do a virtual call and I'll create a Google Sheet for you.
Okay.
So literally we can break it down. Hey, if you show me your W-2 from last year, this is what you made last year. And on average, 30% of that will get taxed. And then I can tell you how much you actually made. And then we divide
Mm-hmm.
that by 12, and that's what your budget is. And now we can
Okay.
talk, what are you paying for a car payment? What are you paying for student loans? What are you actually comfortable with as a housing cost? What are
Mm,
you paying on your credit cards?
yeah.
All those things. If you're willing to give that information to me, I'm willing to help budget.
Yeah. I think, what do you think can help people get past the hurdle of I guess it's a fear of actually seeing what you make on paper. Because I know sometimes people can just be like, I don't even want to know. It's kind of like the doctor thing, right? Like, I'm sick. I don't know. I'll figure it out. I don't even want them to tell me what's wrong. But you guys are kind of basically like the financial doctors, right? Like, you kind of help lay out, this is what it is. And this is a plan that we can help get you to where you want. Or, this isn't possible right now, but if you do XYZ, this could be possible for you. Is there anything that, like any apps or tools that you've seen that could be helpful to people with helping them get organized with their financing?
I think there's tons of apps. There's tons of apps. There's tons of high yield savings accounts. All these little things I could help a lot of people. If it was like first step, like you mentioned, for 30 days, if you
Hmm.
don't have a high yield savings account, get one.
Now,
Um,
what's a high yield savings account for those who don't know? I know it
think of
sounds
it.
pretty self-explanatory, but we're
Think
breaking it down.
it's a lot of reviewing documents. If you look at your
Okay.
regular bank statement, if you work with Bank of America, Chase, or whoever, and you see what your interest rate is, it's maybe 0.01%. Like you're
Right.
making nothing off of it. Right now, I believe a high yield savings account is about 3.3%. So imagine like 300x. I didn't do the math on this. Say if you had $100 at 3.3%, in a year you'll make $3.
Okay.
And just
Okay.
by keeping your money into your account. So
Hmm.
same thing. If you're saving up $1,000, you make $30.
Right.
If you have
Okay.
10,000, you made 300.
It's the whole idea of the compound interest and how it really can snowball for you when you understand how to make it work for you.
Mm-hmm.
So that's really important. What would you say are some tips that you would offer clients of yours when they're first starting into this process, outside of, the biggest things that we've talked about is being open and honest and transparent for sure. Giving as much detailed information as you can, not hiding anything, and just being realistic. But what other things would you say? Is there any mindsets that you would say that a person needs to go through or have when they're starting the process of talking with a lender?
If you're talking to me, I'm biased. As a Marine, I say do more hard things. The more hard
Okay.
things you do, the less, I don't know, insecure you'll be.
Mm,
Like,
okay.
I've slept on dirt for months at a time, not changed my clothes, not showered. When you know when you're at rock bottom, you know there's no way but up, and only you
Mm,
can pull your bootstraps together and get it done.
yeah, I love
So
that.
it's just being honest with yourself and accepting yourself as who you are. We all start from a journey. Um, it doesn't matter where you come from. It's just a matter of how willing are you to get to where you want to be.
Right. Yeah. And I think that's so important, especially now. I know a lot of times people are thinking that, yes, diamonds are made in the rough. That is very true. I
100%.
believe that A lot of times people get discouraged and feel like, home ownership isn't possible for them. I know that a lot of people are struggling financially, but I think the biggest thing is helping people understand that real estate is one of the best ways that you can improve not only your net worth, but also building that generational wealth. And I think especially minorities, because it's something that a lot of us before weren't even allowed to own anything. Especially, it's Black History Month, and I know that is a very big thing for the Black community that, you know, weren't even really allowed to purchase. So now that those things have changed and we have more opportunities to really excel ourselves and help build that generational wealth, I think that helping people understand the possibilities with real estate and what it can really do for you. We were talking, Sylvia and I, yesterday, the financial planner, about how most people who own are actually, their net worth is about 40 times more than the average person. And I was like, that's a huge amount, And I'm really grateful that you decided to come on, because it's important for people to know that there are people who look like us that are doing this in real time and helping others to make their dreams come true in terms of home ownership. So thank you so much for taking the time and doing this. Is there anything that you'd want to add or let people know how they can contact you if they want to talk about their finances and get naked with you and open up and share what they got going on?
Definitely, I put a lot of information out on Instagram, Brian Sumarty Finance, at Brian Sumarty Finance. I just wanted to share another story real quickly. My parents are immigrants. They are first generation Indonesian. They bought in the 90s. We bought a house in Wheaton, Maryland for about 178,000. Unfortunately, we lost our house during the 2008
Housing
crisis.
crash. Yeah.
But I still know a couple of my friends and their parents who lived in the same neighborhood who now own their home free and clear, and their homes are worth over 600,000.
Wow. And so all of that equity is sitting that they can utilize, whether that's for putting a child through college, whether that's buying a second property, whether that's paying off debt that they may have. These are the things that help people actually move forward and get acquire more. Like they say,
And
the
to add
rich get
on
richer.
to what you were mentioning earlier about generational wealth, the thing about finances that most minorities don't know, or most people don't even know in general, is that loans aren't taxed.
Mm,
So say you do buy, like nowadays, the average home price is around 400,000. But imagine you pay off that $400,000 loan, and I think roughly in about 30 years, if you just do not refinance that loan, I mean, refinance it with the same term and pay it off within that first 30 years, that home will be at least 1.2.
wow.
And then if you pull out with a cash out refinance, you can pull out up to 80%. Say you pull out 100,000, that $100,000 is not taxed on your income.
Wow.
So now that money, that 100,000 is up to you and your family.
Right. To utilize however it fits best, which hopefully you reinvest so that you just keep the ball rolling.
100%.
Exactly. Awesome. Well, if there's any questions, if people in the chat, you have any questions, this is your time. Please feel free to drop some questions in the chat if you have any. If you want to go ahead, put your Instagram information in the chat as well, so people can follow you straight from there. That'd be helpful. I'm so excited we have this and that we're doing this tomorrow. We're going live again at 12 p.m. With Kyla Settle from Coldwell Banker. She is a broker vice president there, and our branch vice president, excuse me, and she'll be talking to us about the importance of having the right representation, about finding the right person to guide you once you've talked with a financial planner, once you've connected with a lender and you've been approved. Now's the time to find someone to help guide you with the rest of that process to actually putting in an offer. So make sure you join us tomorrow at 12 p.m. Again, Brian, thank you so much for taking the time. Hopefully we can do this again next time and get even deeper into some more questions and answer some questions that maybe people might have next time. But
I appreciate the fire emojis.
My your timeout for Instagram came on. I'm like, wait a minute, I'm in the middle of a live. Don't tell me to get off Instagram. But thank you again so much for joining us. Hopefully you all can join us tomorrow. If you have any questions about lending, please reach out to Brian. He's a great resource, got lots of information for you. Thank you again. You all have a great night, and we'll see you tomorrow.
Good night, everyone.
Bye. Thanks, Brian.
Thank you, Tiffany.
Okay. Bye-bye.
Bye.